Hello everyone, welcome back to Fundrise Finance. In the US stock market, year to date, we see the energy sector dominating the entire market year to date, and in fact, over the last 1 year also. We can see here, year to date in 2022, energy sector is the only one which is in green, and in the last 1 year, just utilities has been alongside in the green. We can see here the XLE ETF, which tracks all the energy companies in the stock market, giving a return upwards of 25% year to date. And if it was not for the recent downturn in the oil prices over the last 2 weeks, the same ETF was giving upwards of 61% returns till June 8th. And the major contributor to this oil price hike has been the Russia-Ukraine war. And this is a chart of WTI crude, which is the West Texas Intermediate. We can see here from February 25th onwards, the date when Russia actually started invading Ukraine, the oil price is just going steeply higher. Yes, there have been spikes and dips all the way through, but the oil prices have just been going higher and higher all the way till June 7th. And from there, we have seen a steep fall. We see this impacting even our day-to-day life, with the gasoline prices topping $5 a gallon nationally for the first time. So in the past couple of weeks, though we see the oil prices coming down, the gasoline prices at the pump have not seen that big of a dip. We still see the national average just at $4.90. So with the Russia-Ukraine war seemingly going nowhere and just continuing every day, the gas prices at the pump may just be going higher, in spite the government at the center trying a few tricks to bring it as much down as possible from their side. So in this video, I wanted to compare all the companies in the XLE ETF and see which are the most overvalued and the most undervalued of these. Because energy companies are expected to announce spectacular results for the quarter, and that should just bump up their prices higher. So if one is able to buy those companies at a good valuations, then that should give them some decent profit. Let's check them out. So the XLE ETF basically tracks a market cap weighted index of US energy companies in the S&P 500. The ETF has 21 holdings, but the top 10 is almost 76% of this ETF. That's all due to the top two, which are ExxonMobil and Chevron, taking up almost 45% of this ETF. When you look at the other holdings, we see Pioneer Natural Resources, ConocoPhillips, Occidental, EOG Resources, Schlumberger, Marathon, Valero, Phillips 66, Williams Companies, Devon Energy, Kinder Morgan, Hess Corporation, Halliburton, Baker Hughes, OneOK, Coterra, Diamondback, Marathon Oil, and APA Corp. The first stock on our overvalued list is APA Corporation, ticker symbol APA, which has year-to-date returned almost 30%. It has a market cap of $12.47 billion and currently yields 1.37% at a PE of 3.61. From dividends perspective, it has been raising dividends just last 1 year. The 5-year growth rate is a negative 20%. Tracker dividends gives APA Corporation a dividend score of 45 and considers it undervalued by 13.13% with a fair value estimate of $41.96. Morningstar considers APA to be a 3-star stock with a fair value of $35. But as per my dividend theory calculations, which considers the current yield and also the historical one, I found APA to be overvalued by 52% with a fair value of $17.50. The next most overvalued stock is Schlumberger Limited, ticker symbol SLB, which year to date has returned just over 10.5%. It has a market cap of $49.56 billion and currently yields 2% at a PE of 18.76. Schlumberger also has been raising its dividends for just last 1 year at a 5-year growth rate of almost negative 23%. Tracker Dividends gives Schlumberger a dividend score of 41 and considers it overvalued by 9.56% with a fair value estimate of $31.71. Morningstar considers Schlumberger a 4-star stock with a fair value of $49. But as per my calculations, I found Schlumberger to be overvalued by 43.31% with a fair value of $19.87. The third most overvalued company is Halliburton, ticker symbol HAL, which year to date has returned 29%. It has a market cap of $27.92 billion and currently yields 1.55% at a PE of 16.45. From a dividend standpoint, it has been raising its dividend for the last 1 year and again a 5-year growth rate in the negative of almost 15%. Tracker Dividends gives Halliburton a lowly dividend score of 20 and considers it overvalued by 33.67% with a fair value estimate of $20.53. Morningstar considers Halliburton a 3-star stock with a fair value of $33. But as for my calculations, I found Halliburton to be overvalued by 28.58% with a fair value of $22.11. The next highest overvalued stock is Marathon Petroleum, ticker symbol MPC, which year to date has returned almost 30.5%. It has a market cap of $46.35 billion and currently yields 2.71% at a forward PE of 6.32. From a dividend standpoint, we don't see Marathon Petroleum raising any dividends consecutively. It though has a 5-year growth rate of 10.01% with a payout ratio of almost 56%. Tracker dividends gives Marathon Petroleum a dividend score of 60 and considers it undervalued by 55.42% with a fair value estimate of $192.21. Morningstar considers Marathon Petroleum a 3-star stock with a fair value of $87. But as for my calculations, I found Marathon Petroleum to be overvalued by 26% with a fair value of $63.36. The next most overvalued stock on our list is Occidental Petroleum, ticker symbol OXY, which year to date has given returns over 85%. Warren Buffett's Berkshire Hathaway has been increasing its stake in this company through the year, and that, along with the sustained rise in energy prices over the year, has seen the stock returning almost 81% in just last 1 year. Occidental Petroleum has a market cap of $53.91 billion and currently yields a low 0.9%, and it has a PE of 5.4. From a dividend standpoint, it has just raised its dividends for the last 1 year, and the 5-year growth rate has been really, really bad, down negative 38%. Tracker dividends gives Occidental a dividend score of 37 and actually considers it undervalued by 27%, with a fair value estimate of $78.89. Morningstar considers Occidental a 2-star stock with a fair value of $44. But as per my dividend theory calculations, I found Occidental to be undervalued by 18% with a fair value of $47. The sixth and final overvalued stock on our list is Valero Energy, ticker symbol VLO. Year to date, Valero has returned almost 35%. It has a market cap of $42.41 billion and currently yields 3.77% at a forward PE of 6.4. From dividend standpoint, we don't see Valero raising any dividends consecutively. It has a 5-year growth rate of 8.56% with a payout ratio of almost 60.5%. Tracker dividends gives Valero Energy a dividend score of 22 and considers it overvalued by 26.92% with a fair value estimate of $75.95. Morningstar considers Valero a 3-star stock with a fair value of $101. But as for my calculations, I found Valero to be overvalued by 18.22% with a fair value of $84.99. Now let us look at the undervalued stocks in the energy sector as considered in the XLE ETF. Here we have 7 stocks to discuss. The first stock, which is Marathon Oil Corporation, ticker symbol MRO, which year to date has returned 30.71%. It has a market cap of $15.6 billion and currently yields 1.18% at a forward PE of 4.48. From dividend standpoint, Marathon Oil has raising its dividend for just 1 year at a 5-year growth rate of 5.39% with a very low payout ratio of just under 11%. Tracker dividends gives Marathon Oil a dividend score of 39 and considers it overvalued by 13.42% with a fair value estimate of $19.09. Morningstar considers Marathon Oil a 2-star stock with a fair value of $19. But as for my calculations, I found Marathon Oil to be undervalued by 11.04% with a fair value of $24.48. The next undervalued stock is Kinder Morgan, ticker symbol KMI, which year to date actually has returned very less, just under a percent. There's a market cap of $37.37 billion and currently yields 6.74% at a forward PE of 14.25. Kinder Morgan has been raising its dividends for the last 5 years at a 5-year growth rate of 17% almost. It has a very high payout ratio of 104.57%. This is really, really high. Tracker dividends gives Kinder Morgan a dividend score of 45 and considers it undervalued by 12.48% with a fair value estimate of $18.83. Morningstar considers Kinder Morgan a 3-star stock with a fair value estimate of $17.50. But as for my calculations, I found Kinder Morgan to be undervalued by 11.45% with a fair value of $18.37. The next most undervalued stock on our list is Phillips 66, ticker symbol PSX, which year to date has returned just over 11%. It has a market cap of $40.51 billion and currently yields 4.61%. at a PE of 7.23. Phillips 66 has been raising the dividend for just last 1 year at a 5-year growth rate of 7.45% with a payout ratio of 44.5%. Tracker dividend gives Phillips 66 a dividend score of 39 and considers it overvalued by 1.54% with a fair value estimate of $82.09. Morningstar considers Phillips 66 to be a 3-star stock with a fair value of $96. But as for my calculations, I found Phillips 66 to be undervalued by 12.95% with a fair value of $95.11. The next most undervalued stock is ConocoPhillips, ticker symbol COP, which year to date has returned 23.6%. It has a market cap of $115.37 billion and currently yields 2.02% at a forward PE of 6.12. From a dividend standpoint, ConocoPhillips has been raising a dividend for the last 3 years at a 5-year growth rate of almost 12% with a payout ratio of just over 23%. Tracker dividends gives ConocoPhillips a dividend score of 65 and considers it undervalued by 64.42% with a fair value estimate of $255.51. Morningstar considers ConocoPhillips a 3-star stock with a fair value of $96. As to my calculations, I found ConocoPhillips to be undervalued by 13.54% with a fair value of $103.22. The next most undervalued energy stock is Diamondback Energy, ticker symbol FANG. I agree, it's a very unique ticker symbol. Year to date, Diamondback has given a return of 9%. It has a market cap of $21.02 billion and currently yields 2.34% at a forward PE of 4.7. It has been raising its dividend for the last 3 years. I'm not sure why Picking Alpha doesn't have a higher growth rate. There's a payout ratio just below 32.5%. Tracker dividends gives Diamondback Energy a dividend score of 52 and considers it undervalued by 48.58% with a fair value estimate of $232.79. Morningstar considers Diamondback a 3-star stock with a fair value of $124. As to my calculations, I found Diamondback to be undervalued by 16.53% with a fair value of $139.48. We come to the list of final two stocks. The penultimate one we have is Devon Energy, ticker symbol DVN, which year to date has returned almost 18%. It has a market cap of $35.51 billion and currently yields a very high 9.45% with a forward PE of 6.05. Devon Energy has been raising its dividends for the last 5 years at a 5-year growth rate of so high 60%. The payout ratio is almost 54%. Tracker dividends gives Devon Energy a dividend score of 42 and considers it overvalued by 28.29% with a fair value estimate of $38.56. Morningstar considers Devon Energy a 2-star stock with a fair value of $48. As for my calculations, I found Devon to be undervalued by 28.81% with a fair value of $69.26. And finally, the most undervalued stock we have is Coterra Energy, ticker symbol CTRA, which year to date has returned almost 39%. It has a market cap of $21.23 billion and currently yields 2.28% with a forward PE of 5.52. From a dividend standpoint, Coterra has been raising its dividends for the last 6 years at a very good 5-year growth rate of 37.21%. Again, with a very low payout ratio, I would say at 41.22%. Tracker dividends gives Coterra Energy a dividend score of 66 and actually has not enough data to provide any valuations. Morningstar, though, considers Coterra a 4-star stock with a fair value of $32. As for my calculations, I found Coterra to be undervalued by 37.39% with a fair value of $36.20. So there you go, a summary of all the stocks that we just discussed. So with the energy prices foreseen to rise at least in the near future, almost till end of this current year, I think there's still some upside to this sector. And as we can see from this list, we still have a few stocks which are undervalued, which should give a nice, good return for your money. Hope you like this video. I would really appreciate if you could hit on that like and subscribe button and help grow this young channel. Until we meet in our next video, let's try as much as possible to be financially healthy. See ya.